This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Matthew Merle, managing partner of Fifth Era and Blockchain Co-Investors. Matthew and his partner, Allison Davis, have just authored The Intelligent Investor, Silicon Valley. Matthew, thank you for joining us.
It's great to be here, Hall, and I very much appreciate you taking one of your episodes for us to talk.
Great. So tell us more about your background.
So Alice and I were a husband and wife team. We came to America 35 years ago. At the time, we were consultants with McKinsey & Company. They sent us to business school, and we never went home. And the last 35 years, it's almost all been in Silicon Valley. First, senior partners, large consulting firms. Then Allison went off to be CFO of Barclays Global Investors, which is now BlackRock, the world's largest asset management company. And I ran the West Coast for various consulting firms, Kearney, Monitor, Booz. And about 20 years ago, we were fortunate that California had been good to us, and we had the resources to open our own family office, which is Fifth Era. And out of that, we've been internet, fintech, and blockchain investors ever since. Or at least blockchain investors is the story of the last 6 or 7 years. But that's basically it, Hall. It's all about, for us, early stage technology, Silicon Valley, internet, fintech, blockchain, and building out a digital world.
So what is your investment thesis at Fifth Era and Blockchain Co-Investors?
Oh, cool. Great question. Thanks for asking it. Well, Fifth Era is part of our investment thesis. We believe, and we've written about this, but we believe that the world is transitioning to a completely new digital economy globally, fueled by the internet, of course, but complemented by digital monies and digital assets. And that new world is very different from the industrial era of the last 200 years. We're transitioning through to that time. It isn't coincidental that the world's most valuable companies and the fastest growing companies are digitally enabled companies. And the value creation and wealth creation of this time is extraordinary. And so our investment thesis begins with that. Now, we're not life sciences investors. That's the other big theme of our times. So we give a nod. Life sciences is moving forward and accomplishing amazing things too. But for us, it's the digital economy. And then underneath that, because we're fintech investors, it's about building the infrastructure for digital money and assets. And blockchain plays an important role in that. And I'm sure we'll talk about that, on this podcast.
So why do you focus on early stage investing? There are many other things out there. Why early stage?
So if you dig around in the numbers, and our first book, we talked a lot about this, but what you'll find is over the long haul, like 25-year returns, on an annualized basis, fixed income will get you 3 or 4%. Public equities, probably 10 or 11% per year. Venture capital in America will average about 25% net. But early stage venture capital will be much higher than that. It's actually probably the highest performing asset category in the world. Yes, it's more risky, but the return is much, much higher. And unfortunately, most investors in America are encouraged to put almost all of their resources into fixed income, public equities, and large cap real estate, which is sort of ironic, but that's what the big asset managers, wealth managers, private banks, and so on, that's what they have to give you. That's what they have on their platforms. For us here in Silicon Valley, early stage tech is probably the highest performing asset category in the world. And that's what we want access to. That's where we invest our capital.
So what inspired you to write the book?
So the new book is the continuation of a journey, Hall. Our first book, written, 5 or 6 years ago, was about the realities of early stage tech investing. And we just wanted to share what we'd learned. That's Build Your Fortune in the Fifth Era. We wrote a book on innovation and another book on blockchain. And then Alice and I were sitting down and we learned a lot from Benjamin Graham and The Intelligent Investor. back when we first came to America. It's a great book, 600 pages, written in 1949. It's still probably the best-selling investment book in America. But you know what? It only has one page on technology investing, and that's at the end of Appendix 7. And back in 1949, Benjamin Graham writes, apart from IBM, most technology stocks are not really investable. Well, in 1949, that might have been true. But here we are 70 years later, and the world's most valuable companies and the highest returning opportunities are all in technology and innovation. And we felt that we needed to find a way to complement the intelligent investor by creating a book that sort of really focuses on early stage tech. And then we sat down and said, should we write this book? And we said, no, look, a better idea is to get 50 or more of Silicon Valley's best angels, best VCs, best incubator and accelerator folks. And we'll ask them the same questions that they would have to answer if they wrote their own book. But instead of giving them 50,000 words each, we'll give them 3 pages each, and we'll just cram all that wisdom, all that knowledge into one book. And that's what the new book is. Basically, it's a fire hydrant of perspective from Silicon Valley's best, or amongst Silicon Valley's best angels and VCs.
What can you tell us about those 50 Silicon Valley investors who contributed to the book?
So they are people we know. I mean, we've been here 35 years. We have some of the top angels from Band of Angels and Kretzu Forum, Anthill Angels, Berkeley Angels, and so on. We have some of the best VC general partners from Greylock and Draper. Tim Draper's in the book. We have some of the world's most renowned early stage tech investors, Greg Kidd, who was first money in Twitter and Square and Ripple and Link2 and a host of others. So these people have, probably each of them has 10 or 20 years or more of tech investing under their belts. They're mostly very, very successful. A few of them are service providers, so they're not all investors, but of the 55, I think maybe 45 of them are actually investors. It's about 1/3 female, 2/3 male. So we've got a lot of female representation. We'd like there to be a lot more female early stage tech investors than there are, especially since women control more assets in America than men, but they're very underrepresented in early stage tech. And then about 25% of the people in the book would acknowledge themselves as being diverse in terms of their ethnicity. So it's really a very diverse group of people, a lot of different voices. They agree on a lot of things, but they don't agree on everything. And it's very empirical. You got to dip in, read about what these different people think, and then take your own conclusions from it.
So who's the primary audience for the book?
Yes, 2 audiences. The first is people who are thinking about being early stage tech investors. Remember, Alison was the CFO and head of strategy for the world's largest asset manager with $7 trillion under management. Even today, BlackRock doesn't have a lot of early stage opportunities to provide its investors, and neither does any other bank in the world or asset manager in the world. So we feel that most people in America, most family offices, most high net worth individuals, they're overrepresented in the past and they're underallocated to the future. And we want to give them the facts and let them make their own judgments and their own calls. So the first audience is them. The second audience is for all the tech entrepreneurs. Everything that you and I cover and think about and invest in is being built on the shoulders of a small number of exceptionally gifted entrepreneurs. And if anyone out there wants to be a tech entrepreneur, certainly if you want to pitch any of the investors that are in the book, it's a very quick way to get behind the scenes, to understand the motivations and incentives and the way the angels and VCs are thinking. And so we wrote it with them in mind as well.
And so how will readers benefit from reading the book? What will they get from it?
Well, I think, let me put it this way. I know you're in Austin. I bet you got a beautiful house down by the lake or the river, and you've probably got a nice veranda, and it's in the summer it can be really hot. And when you're sitting out there with your mint julep, and you're thinking, I wish someone would come and teach me a little bit about early stage tech investing as practiced in Silicon Valley. Well, whoever that person is that you would choose, I think they might be in this book. And furthermore, there's another 54 of them. So imagine that. You can have 55 people come to your veranda and all tell you what their wisdom. And in fact, what we did was we asked them all the same 20 questions. Why do you do this? Why do you enjoy it? What have you learned? What are some good decisions you made? What are some bad decisions? What do you think are the characteristics of a great early stage investor? What do you think are the characteristics of a great entrepreneur? What advice would you give entrepreneurs? So we asked these types of questions, and you've got 55 answers to each question. And there's a lot of overlap and consensus, but there's also some differences of opinion. And if there's one thing we've learned after 35 years in Silicon Valley, it's that not only is there more than one way to skin a cat, but, and sorry if that's an analogy that people don't like, but not only is there one way to skin a cat, but there's a lot of different ways to ride your bull. And I know you're a cowboy fan. Well, let me just say, these guys are all very good bull riders, and this is a tough space. You get thrown around a lot, but at the end of it, the returns are the highest in the world. And we go along for that ride because we know the payoff is so enormous at the end.
Well, so what was the most important takeaway you found in all of those interviews?
I'll tell you, it's something that is a bit of a cliche, but there's a lot of substance underneath it in the book. VCs will tell you they back the team as much as they back the idea. And that's different. So in The Intelligent Investor by Benjamin Graham, most of those 600 pages are about quantitative analysis that you can use on public stocks. So discounted cash flow, terminal values, intrinsic value, trying to figure out who are the value stocks and who are not, and so on. That's what he is focused on. Well, none of that works in early stage tech because there are very few numbers and the numbers are changing all the time. But my big takeaway was the substance behind the human dimension in early stage tech. And the people in these 55 contributors, they peel it back down and down and down to some really simple but powerful thoughts. I've been doing this myself in early stage tech investing for more than 25 years. But I learned so much going through the exercise of compiling the book. And these 55 people, they've already taught me a lot, and I'm reflecting a lot upon what they've said. And I'm sure I'll do a few things differently going forward as well.
Well, so how did the book change the way you think about early stage technology investing, or did it change your thinking?
I think that it reinforced in my mind that we're in the right place at the right time and we're doing the right things. You are sorry to use all of these analogies, but if you don't fish in the right pond, you're not going to catch a big fish. And if you put all your money into fixed income, I'll tell you what you're going to get. 3%, 4% if you're lucky. And after cost of living adjustments and after tax, probably you're losing value every day. Now, if you leave your money in cash, it's even more dramatically declining asset. So early stage tech investing is probably the highest returning asset category in the world. And if you go and you fish in a disciplined, highly diversified way, you throw out a lot of hooks and you have a lot of companies and a lot of entrepreneurs that you're backing, you've got a good chance of getting that return. There's a lot of other things you need to do. So you can't be a flyby investor in early stage tech. You've got to know the right people. You've got to spend your time understanding the sectors that you're going to focus on. You've got to get the best deal flow. You've got to be able to do really good due diligence. I know that your podcasts cover a lot of these topics, Hall, in the past. I've seen some of the other podcasts you've done, and I know there's a lot of great content there for people thinking about being investors. But at the end of the day, the book reinforces my view that I'm spending my time wisely. And, for people like you and I, we don't have to do this. I mean, we've had good careers. We've got to this point in them. We could just check out and relax and and enjoy the fruits of our very long and hard careers. But if you choose to do this type of a thing, you're a bit of mentor, a bit of coach. You learn every day. These entrepreneurs and their companies teach you about the future. And I think one of the contributors in the book, Victoria Pettibone of Astia, says it very well. Early stage investing is investing in the future that you want to live in. And I think that's really important. You get the chance to shape the future with your capital and with your human effort. And for some people, that is incredibly rewarding.
Well, so how have you integrated these insights into your investing at Fifth Era?
So Fifth Era, so blockchain co-investors is the principal investment vehicle for us today. We do our direct investing in internet and fintech companies, but a lot more of what I do is blockchain co-investors. And the story there is about 7 years ago, we saw the internet and fintech beginning to merge. Alison, who's on the board of Silicon Valley Bank and Fiserv, and before that, just rolled off Royal Bank of Scotland's board for 10 years, after 10 years there, that they were asked by the Bank of England to have a point of view on Bitcoin. And this is about 2013. So she had her own journey. She learned a lot. And by the end of it, she agreed to be chairman of the advisory board for Blockchain Capital, based in San Francisco. It's probably certainly one of the top 3 blockchain VCs in the world, maybe the best. And so we became LPs in all of their funds, Bart, Brad, and Spencer, and we love what they do. And then Alice and I sit back and sort of said, look, the world's a big place, and we believe in diversification. We believe in investing with the best investors. We believe in early stage rather than late stage. How are we going to make sure that we have the largest possible diversified portfolio of the emerging unicorns of this space? And the problem was, and the answer was, BLPs and the best VCs globally who are focused on fintech and blockchain. The problem is we didn't have enough capital to be in all of their funds. So the good news was we were already in some of the best, but we weren't in enough. And so we ended up creating a vehicle of fund of funds. I can't talk a lot about it on an open webinar like this, podcast like this, but suffice to say it's called Blockchain Co-Investors. Anyone can find out more about us, and we can share more information to accredited investors. But basically, the strategy is we pooled the money of ourselves and a bunch of other family offices here in California and also in London and Zurich and Hong Kong and Sydney. And today we're investors in the top 20 blockchain VCs globally, Asia, North America, and Europe. And through them, we're investors in 10 of the 16 blockchain unicorns and another 200 or so blockchain companies and projects. And so that's a lot of my time and energy. And I think the book reinforces the sensibility of that type of a diversified investment approach. It's not easy. And as I say, it takes some capital to play the game. But the good news is there are other investors out there who like what we're doing. And so we have enough capital to do this. And we are, as far as I'm aware, we're the only US blockchain fund of funds, so a venture fund of funds. So it's a sort of a unique thing.
Well, great. So based on this experience of writing this book, what would you consider writing next?
Yeah, okay. Well, so Hall, so my personal story is, I from the age of 8, I was a pretty active sportsman myself. I was a very good rugby player growing up in England, played a very high level, like it'd be like the East-West Bowl game. I sort of played at that type of a level. And then I was also a rower, and I have medals from the World Championships in rowing. And that was something I did every day. And so, every day, every week, from the age of 8 until past 50, I was competing and racing, and it was 2 and 3 hours a day. But then I got injured, and that took out the competitive opportunity for me as a rower and as a sportsman. Well, I needed something else to put my energies into. And very early on as a child, I'd always wanted to write books, but I never got round to it. And looking back, I sort of said, that's something I've never done, and I want to do more of it. And now I have some excess energy, if you will. because I'm not tired at 9 in the morning after a hard workout every day. So what am I going to do? And so I played around with writing our first book with Alison, and I found I really loved doing it. And so we've written books on investing, innovation, blockchain, and then the book you and I were just chatting about. But my other hobby is I've also started writing the novels of my youth that I never did. So I wrote a sci-fi novel, Second Chance. I wrote a book which is recently published called The Ministry of Bitcoin. It's about the first 10 years of this century, and it connects together Al-Qaeda and September the 11th with Anonymous and WikiLeaks and the Freedom and Patriot Act and Bitcoin and the launch of Bitcoin. And I won't say any more, but suffice to say, it's a novel. It's not real, but I give some answers to some of the biggest questions in that space, like who's Satoshi Nakamoto, the inventor of blockchain. It's just a novel. It's just for fun. So going back to your question, what would I write next? I actually don't know. I think that Alice and I find this a rewarding hobby. It gives us a chance to share some of the things we've learned. But I am very taken with this model of, given our place in the ecosystem, getting the very best people to tell their stories in a compilation book. So I might invite 50 of Silicon Valley's leading entrepreneurs to put their thoughts together, advice for entrepreneurs. Alice and I are also thinking about maybe doing something with female board directors. Take 50, because she is one of the leading public company female board directors in America. So we might put together a book where female board directors talk about their journey. It's obviously it's tough to be one of the few female board director of one of the Fortune 1000, but they're doing a great job and they've figured out how to make it work. And there's a lot of advice I think they could give to the next generation coming along behind them. So anyhow, these are some ideas, Hall, but if you've got a better idea, I'm very open to listening. And we've published enough books now that we sort of understand the process.
Great. Well, we look forward to seeing what you come out with next. In the last few minutes that we have today, what else should we cover that we haven't?
Well, I'll tell you what, Hall, I'll bounce that back into your court. I've looked at your website. I've listened to some of the podcasts. You've got some great VCs. You've got also thematic podcasts where you pick a theme and you focus on it and you give advice through that podcast to the listeners. So what don't you have that we should talk about? You know, what's on your list of the next podcast you'd like it to be such and such, or your audience needs to know more about such and such, and then maybe we can chat about that topic.
Sure. I think now that we're coming out of the COVID pandemic and various stages of reopening and insurgences and so forth, the economy is getting a whole new set of care abouts. There's a whole new range of new technologies. And of course, your book is talking about that new era. But in this time frame, what are going to be the new care abouts that startups should be pursuing? Many startups are continuing what they did before. They were online with content and engagement, but many were not. And even those who are online are finding that the market has changed and the needs are different. And so we're looking at what are going to be solutions to the next stage of problems: food security, wildfires, climate change. A whole new range of things are on the table. And these are the things that many of our investors are trying to sort out, is how do you approach those? And then startups, how do we solve those problems? So those are the things that we're looking at these days.
Yes, well, that's great, Paul. So taking that from the top, this terrible pandemic that's been so terrible for many families and many businesses in America has a silver lining. And that silver lining is it accelerated all of the adoption curves towards our future. It's always difficult to get established businesses and established industries to change. This year, they've had no choice. And so whether it's telemedicine or digital education or virtual and digital entertainment or electronic commerce or digital payments, all of these things have been greatly accelerated because of this time. And those adoption curves aren't, we think, going to reset and go down, because we think Americans have discovered that it's not that bad to buy things at home with the click of a button and have it delivered the next day. just to use an example. You and I have been using Amazon probably for decades. Well, most of America doesn't or hasn't up until this year. By the time you get something like telemedicine, most of us still go to a doctor's office in a 30-minute slot that we book 2 weeks ahead. And then we sit in the waiting room exposing ourselves to other germs and problems. And then we get our 30 minutes in front of the doctor. Well, guess what? The doctors are really enjoying doing real-time virtual sessions with their patients almost on demand. So there is a silver lining in this pandemic, and it's the future has been accelerated. That's true in the digital economy. With life sciences, I think it's true too. I think that there is an urgency now for some of the technical breakthroughs and innovation breakthroughs that people have been working on for a decade. It's just now we understand what a global pandemic can look like. And we're beginning to say we need to accelerate and scale up some of those new forms of testing, those new forms of biopharmaceutical productions, which includes, by the way, accelerating trials and testing and getting products to market faster. People have been working on those issues, but it's been hard to get them through. All of a sudden, vaccines are being accelerated now and are coming to market so much faster. And then clean energy. It's somewhat orthogonal. It's not driven by the pandemic. But of course, we're all sitting at home and we're more aware than ever that strange things are going on every continent. The weather and the type of climate that we're experiencing and some of the negative consequences are being held up every day now in our faces. And it's not a question of debating who did what to whom. It's about figuring out how do we move forward. And how do we move forward means clean energy, energy efficiency at scale. We got to get these things done. I was just looking at Tesla. I've been a Tesla investor for a long, long time. Tesla just got record quarterly profits, thinks it's back on track to hit the 500,000 car mark this year, even though they had to close their factory for a substantial period of time. Why? Why is that happening? It's happening because a lot of Americans are saying, maybe I should try an electric vehicle. And whether you love him or hate him, Elon Musk, that is, once you get in a Tesla and you drive it around the block, you start saying to yourself, well, this is pretty cool. And if I can have faster acceleration than a Bugatti, and if I can have a good amount of torque that accelerates me, neck snapping speed, and I can do all of that whilst also having a smaller energy footprint, well, maybe I should give it a go. So very long answer, but I think you nailed it. I mean, early stage technologists are investing in the future that we want to live in. And it's a fun game to play. You learn a lot. You get exceptionally high returns if you're fully diversified and if you follow the best practices. And every day it's like drinking from a fire hydrant. I'm old enough that I could check out if I wanted. The reality is I'm learning more every day than I ever have in my life. And it's just a lot of fun.
Well, we look forward to engaging those challenges together. How best for listeners to get back in touch with you?
So Alice and I, we're available. We live in Plainview. You can add a .com to either Fifth Era or Blockchain Co-Investors, and you'll find us online. And, contact details are at all of those places. If you're an accredited investor, we ask that you sign up, because if you do sign up, then legally we're allowed to share more information with you. And then in terms of the books, they're all available everywhere. So you can just go to Amazon or Apple or Smashwords or your own favorite online book company and just plug in my name. It's probably easy. There's more Alison Davises than there are Matthew Lemerles. There's only one Matthew Lemerle that I know of. And if you plug my name into Amazon, everything pops up. So anyhow, look, Hall, I love what you're doing. I think that you're really adding a lot of value to your audience. I'm so happy you thought we were worth one of your segments. And if there's any way we can help you and your audience, just let me know. And we're here and we want to help.
Great. Well, I want to thank you for joining us today and hope to have you back for a follow-up soon. And looking forward to next steps there. Appreciate your taking time.
Well, I enjoyed it too. And I know some of my answers were long, but, always happy to do another segment if you think it warrants, and we could double click on an industry or on a particular theme if you're interested in doing that another time.
Sounds good.
Thank you very much, and good to be with you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall in podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.